Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. So as always, we're going to go into basically the key factors in the news, which have been numerous of late, as we've seen, obviously, a ceasefire that, again, whether it's holding or not, is kind of up for debate. But for the markets, they are believing in it. And we are seeing the stock market gapping higher today or set to open higher. But basically, yesterday was a wild ride. Early in the day, we saw the markets falling after Iran launched missiles back at bases, U.S. bases in Qatar. But then what we saw was the market rallying massively off of that and oil plunging, as basically it was told to everyone that Iran choreographed or basically alerted the U.S. that this was coming. And so it essentially became a de-escalation point, right? And then from there on, we saw oil collapsing dramatically. I did exit the rest of my short on oil, just a heads up. That was a great gain. I know a lot of people doubted it. Oh man, how can Gareth be looking to short oil into this geopolitical turmoil? But ultimately, again, the simple dollar cost average. Remember what I talked about? I said how oil, when it spikes on Middle East issues, if you look historically at the data points and ignore emotion, guess what happens? You come to the conclusion that oil pops and then it generally fades. And then we looked at the charts, and the charts clearly told us that oil was into resistance when it hit $77 a barrel, and it likely would pull back. I mean, all of these key factors were really keen on alerting me to take that short position. And we'll cover that in just a bit. There was one other factor that helped the markets rally yesterday afternoon and into today, and that is more and more Fed officials are talking up rate cuts. So again, whether you like it or not, rate cuts, they aren't scheduled for July, at least per the Fed Watch tool, but for September, we are on pace per the probabilities of the Fed Watch tool to get a cut in rates. All right, probably just a 25 basis point one. All right, let's flip over to the charts here and take a look. The S&P futures are up, but we are off of our highs, kind of fading just a little bit here. But if we look at yesterday, right? So this was yesterday out of the gate. The markets were rallying up, 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 up. Then here we started to hear that Iran had launched those attacks, those missiles towards U.S. bases in Qatar. And then all of a sudden we saw oil plunging and the stock market rallying on the back of the attack being alerted to U.S. officials before it took place, so that the U.S. and Qatar could essentially shoot those missiles down. Basically, to be clear, this was a way for Iran to kind of save face, right? Where they could essentially say, okay, listen, we did retaliate, but they retaliated in a way that didn't escalate the situation, right? And I think that's the key. And that's what the market recognized there and rallied up on. And then into the end of the day, we went sideways. And then right here is where we heard about the ceasefire. Trump announced a ceasefire between Israel and Iran, and the markets trended up overnight and then fading just a little bit today. All right, so that's where we sit at this point in time. Couple things to go over here as we continue through. Just looking at a couple other factors. If we go to the S&P 500 daily chart, all right, let me refresh that. There we go. And if we look at this chart, we can see that yesterday we were up, and today we're going to be up again. But start watching this area right here. This is where the market should struggle to get through. So essentially, we have our wedge pattern. We broke the wedge, came down a little bit. Now we're getting a couple tidbits of good news on the geopolitical front, which is pushing stocks up. But the question is once we get back to the scene of the crime zone here, and you can see it's three trend lines. You have this upsloping trend line here and this upsloping one that's a little steeper here, which make up the wedge. And then you also have your all-time high. All three of these create this zone essentially between 6,100 and 6,150. So that to me is a major zone of resistance that on a technical basis should denote a major, and I repeat, major battle between the bulls and the bears for dominance, right? So are we going to break through the all-time highs and just continue to rally up, or are the bears going to come out and push that market down and kind of keep that from breaking? And again, we will know more. It seems like by possibly Friday, we could have an answer on this chart. For the NASDAQ 100, it's the same exact thing. The only difference here is the wedge pattern, the three lines kind of intersect right here, and they kind of diverge right here, but it's still the general vicinity here on the NASDAQ 100. And again, that's in that 22,200 range all the way up to about 22,500. That's your big battle zone on the NASDAQ 100 index. All right, looking at the US dollar, the dollar continues to inch lower. Notice again, you have your megaphone pattern here with key supports. And again, this is a great trend line, high pivot to low pivot. Take that as a trend line, extend it out. And what does it give us? It gives us this exact low here and this exact low right here. And if we come down into it, that should be support. But also we have to monitor to see if it breaks, right? But again, right around 97.70 on the DXY, that should be technical support. All right, 10-year yield is basically holding this key trend line. I showed you guys this trend line yesterday in the game plan. Low pivot to low pivot right through here. And it basically pierced yesterday, but recovered to close on the line. And today we can see we are back above that line. So this line is holding for now. The question is, do we see the yield start to rise into resistance, or do they kind of go like this and then break to the downside? Time will tell. If we break to the downside, 4.13% is my downside target. That's where the next battle between bulls and bears will be fought. All right, just a side note here, guys. I just wanted to also thank you guys for tuning in yesterday to Investment Empowerment Day. It was an epic day of just tons of trading live, analysis live, insights from top traders that, again, we make our money trading the markets overall, and again, analyzing charts and helping understand the psychology of trading. And again, your questions, when I know we didn't even get to even a minute amount of all the questions that we got, but we will do our best to answer them over time. And hopefully other people ask the questions, and a couple people, we answered multiple questions that people had just by answering other people's. But it was an epic day, guys. And again, from the bottom of my heart, you guys make us do what we do here, because essentially, it's the kind words that you guys share with us, right? I mean, there were so many amazing things said yesterday. It warms our hearts, and honestly, it fuels our bellies in the way of driving us to keep doing what we're doing and evening the playing field with you guys, with institutions, right? Those institutions, they think they can bully all of us. They have more money. There's no doubt about that. But we can actually compete and beat them by using technical analysis. Beautiful stuff. All right. A couple other things here, guys. Before we get into other charts here, and we're going to go through oil in a second. But before we do that, I did want to just briefly showcase the Fed Watch tool and just go over that, right? So again, the Fed Watch tool here, guys, bear with me as I share my other screen here to get you guys in tune with this. This is something very, very important. I know you have me there on the main screen of the homepage from Verified Investing. By the way, I went over this yesterday in Empowerment Day. Look at all this insider selling pressure going on. And this is all, by the way, all of this information is on our homepage. All of it's on our homepage. So just be aware of that. Now, one of the things that I explained yesterday on Investor Empowerment Day when someone asked about this, which I did think was worthy of going over, notice how there was very little selling when you go back to basically, early to mid May, because that's earnings season. And there's what's called a quiet period where insiders are not allowed to sell their stock coming into earnings season and through earnings season. But earnings season ended really right here. And then look at all the insider selling. And I would just point this out is if this market is just going to continue to go up forever, why are all these insiders dumping massive amount of stock versus the buying? I mean, look at the buying of insiders. So these are insider buys up here versus insider sells. It's night and day. I mean, holy cow, is it night and day? And so those are things that, again, by itself, it's not giving us a technical entry point. That's what the charts are for. But at the same time, how can you deny that that's not a good signal to see that insiders are dumping so heavily? All right. So again, we'll continue to follow through on that. Just scrolling down here, don't forget you got your earnings calendar here. So the big ones, by the way, FedEx today after the bell, and then Micron tomorrow after the bell. Micron, I'm very curious about because the chart is extremely extended. Nike also Thursday after the close, but Nike's not a big one. I would say this one here, Micron, is the biggest one this week for technology stocks. Going down here, guys, again, just continue to scroll down. So much information on this homepage, folks, but here's our Fed Watch tool. And if we take a look at the Fed Watch tool, we can see again that as of now, the July 30th meeting here, there is no cut expected. Basically, 83.5% chance of no cut. So that's pretty darn high. Would be very unlikely. I mean, maybe if we get really bad news on the economy between then and this point here, then we would get that. But look, it is favoring a cut in the September 17th meeting. So again, favoring a cut in September, also favoring a cut in October, and then no cut in December, but then another cut in January. So again, essentially the Fed is now starting to alert us. Multiple Fed officials have been talking this week and last week saying that rate cuts are coming. But I would just point this out. If you go all the way to December of 2026, so December 2026, a year and a half away, where's the Fed funds rate? Still at 3 to 3.25%, right? And so what that tells us is that even we're not going back here at this point. At least at this point, we're not going back to 2% or 1% or even close to zero on the Fed funds rate, because we're in a whole different environment. This is no longer the COVID panic where the Fed and the government overreacted. So little things like that, again, just important for us to kind of keep in mind on the charts. All right, now we'll go back to the charts of stocks here as we bring that back up. And I do want to take a look here at a couple different charts. If we take a look here at AMD, AMD is on my watch list. It's going to be opening higher. There's a trend line here. There's a gap fill right here at 138.60. And then there's also an upsloping trend line. Let me just see here where my upsloping. I think it was right here. Right here is that upsloping trend line. So again, I'm following this very closely because right up here you have two converging points that should yield a very significant zone of resistance. I'm eyeing for a short here on AMD at around 138.60. In addition, we just mentioned Micron. Micron, I got a lot of old trend lines on this chart. We can remove those. But look at Micron's extended move with earnings tomorrow and look at what is lurking here. There's a gap fill coming up at around 127.70. And that, my friends, after such an extended move, I would assume there would be some resistance there. Also, look, if you extend this out, it also is this pivot low. And really, if you bring this back here, you could make a case that it was this pivot high over here as well. And so again, this level right around 127.70, 127.80 should be significant resistance on Micron. All right, let's flip over to oil today. Guys, again, this is one of the great examples, and I stress this, the great examples of charts over emotion. So for me, I looked at this chart on oil, and again, I had my short level where I started to short at $66 a barrel right here. I didn't necessarily know that we were going to see Israel attack Iran ahead of time. And so I started at just a 1% of portfolio. Then I added 1%. Then I doubled up here at a 2%, accumulating more and more. And the reason I did that, once I saw this parallel, look at this beautiful parallel. Resistance, 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 therefore resistance. And we got the pair again. But look, not only did it hit the line again, but it didn't take out the previous high. That was an extremely bearish signal. In fact, I mentioned that in the game plan yesterday we did not take out that high and that it was a bearish signal. And lo and behold, from that point of near $77 overnight, we came all the way down to my technical support line here and kissed the $64 a barrel level. Amazing. Absolutely amazing. What a drop on oil. And I love how this level, look, pivot highs, pivot high, pivot high, and pivot high, breakout. And then what's this called when you go back here? Retrace to the scene of the crime, right? So that would be technical support. And so, listen, it missed it by a few pennies, as we can see. But still, the point being is that it found support right in this range. If this was during market hours, this happened to be yesterday overnight in the after hours. But if this had hit this level yesterday or during the market hours, I would have absolutely bought oil there. I would have flipped my short just right into a long. And again, I wouldn't be surprised if oil bounces back to 68, 69. And again, just keep in mind that the ceasefire could end, and very likely We're already hearing about, one side accusing the other side of breaking the ceasefire and all this. And then Trump, like the parent, is like, no, you guys both sit in your corners. It's just one of those things where it's very precarious. But the point being, and I said this many times over, is number one, the technicals told us to be short oil. Number two, I said, guys, OPEC plus keeps increasing production. So that's more supply. And then also the U.S. economy is slowing. It's slowing slowly, but it is slowing. That's less demand. And then the U.S., yes, I'm hearing more and more rumors about, the U.S. is at max capacity of production. Yeah, right. I mean, it's all based on price, right? I mean, if price goes high enough, they'll drill more oil. So the point being is you have more supply, more demand, technical resistance, price should go down. I just use simple logic there, which is so important, but again, underrated in trading and investing. Most people don't use it. And it gave me that opportunity there on the downside. So good job there if you did follow me. It's not to say it wasn't a scary trade per se, because again, if you allowed emotion to creep in, sure, it was a little scary. But again, the charts and the data told us the truth. Bitcoin, beautiful bounce, guys. So I covered half my Bitcoin short down here near 98.7 or so. I re-added it back at this level. All right. And again, it's still a relatively small position, but I also went long a bunch of altcoins on Sunday on this dip, and I've already out of all but one of them for basically 10 to 20% gain. So if you're in my smart money crypto, that's awesome, guys. Great job. But the point being is I'm inching back in on a short here, retrace to the scene of the crime. Not to say it can't go through and test this, but if it does, I have that maneuverability to add to my resistance and double up my position there. But ultimately, again, you have to respect resistance. Now, we closed below, we confirmed, hit support here, bounced. This should be technical resistance. Obviously, a lot to do with how the market goes. Gold is falling today. Again, as things cool in the Middle East, the risk off trade, which is gold. People buy gold when they want to take risk off the table. That obviously is fading as we're seeing Iran and Israel kind of have a pseudo ceasefire here. So gold is coming down. But remember, this is really the line that matters. This uptrend. This is your uptrend in the near term here since the beginning of the year. There will be support around 32.75. If that were to break, then you start coming down towards like 3,100 and maybe even 2,900 to 3,000. At this level, if we ever get down here, I'm buying gold again, though. Pierce to 3,000, I think, is a no-brainer long opportunity again. I'll keep you guys posted as the charts continue to trade. Taking a look here at silver. Silver is trading slightly lower. I'm still just patiently waiting down here. If it gets here, I'll be a buyer, assuming everything still aligns as the charts are now. If not, then so be it. I have no problems missing a trade. I've missed many trades in my career, and I'll miss many, many more in the remainder of my career. Oil again coming in here. You have a lot of, this is natural gas. Natural gas coming in heavily here. Lots of technical support around 363 to 365. Small trend line right here. Trend line right here. And again, they're converging. If oil comes, if nat gas comes into this level, I actually do think you get at least a one-day bounce. There's not a huge amount of upside, so it's not like a great swing trade. Yeah, there should be a bounce here, but at the same time, like your upside's limited to here. So it's not like there's a ton of a runway here to just make a ton of money. So for me, as a day trade, maybe as a one-day hold, I might be interested. Aside from that, it's not something that I'm looking to make 10, 15, 20% on, right? I mean, it's just would be a quick trade, bounce, and then get out, because ultimately this upsloping pattern ultimately breaks down, I think, and eventually goes down to retest this 308, 309 level right down here. All right. So again, let's keep an eye on things as they trade here. Markets, again, are looking to open higher on the day, so we'll monitor that and see how that all plays out. I'll be trading with my traders in the live day trading room. I always encourage you to come in even for a one-day pass and check it out, just because I think the knowledge in there and the, just watching us trade, how do we maneuver in positions in real time, seeing our exact entries on the screen, our exact exits, how much we're up, how much we're down. It's all things that, even if it's just one day, it's incredibly knowledge provoking, right? It brings so much insight into how you need to be as an investor. Even if you're not a day trader, just you can apply all the same mentalities to swing trading or investing. All right, you guys are awesome. Thanks so much, guys. I really do appreciate it. I will talk to you soon. Take care.